So, what actually is a central bank, and what does it do? Explained with real-life examples. Ever thought about how a country's economy stays going? That's the central bank. It sounds technical, even intimidating, but it affects your daily life more than you think. Let's break it down in a simple, relatable way. The place where money gets made. A central bank is the place that issues a country's money. But it's not just about printing notes. The real job is answering one big question. How much money should there be in the economy? Because if there's too much money around, it leads to inflation. If there's not enough money, the economy slows down. You can think of it like a doctor adjusting the body's blood pressure. The brain behind interest rates. Mortgage rates, credit card interest, car loans, business loans, all of these are affected by the interest rates set by the central bank. Here's the simplest way to think about it. When interest rates drop, loans get cheaper, and people spend more, the economy speeds up. But when rates go up, loans get expensive and spending slows, cooling down the economy. The central bank is basically the steering wheel of the economy. The bank of banks, with U.S. examples. In the U.S., we all know the big banks, so we've got Bank of America, J.P. Morgan Chase, Wells Fargo, Citibank. But these banks also have their own bank, right? The Fed is basically America's central bank. When banks move money between each other, settle payments or borrow short-term funds, they're doing it through the Fed's system. This infrastructure keeps everything running smoothly. That's why ATMs keep working, money transfers don't fail, banks can access emergency liquidity during crises, and they're basically the invisible plumbing beneath the entire financial system. Dealing with financial crises. Unexpected shocks happen sometimes. A bank is on the brink of failure. A global crisis hits, stock markets panic and some part of the system freezes. That's when the central bank steps in. It provides liquidity, calms markets, and prevents a small fire from turning into a wildfire. Imagine it's like the emergency brake assist you find in a car. You hope you never need it, but it's good to know it's there. One of the central bank's main jobs is to keep inflation under control. Meaning, prices shouldn't be changing all the time, inflation shouldn't getting out of hand, and people should be able to plan ahead. Using interest rates and money supply tools, the central bank tries to keep the economy balanced, not too hot, not too cold. We're always keeping an eye on the economy. Central banks don't guess. They keep a close eye on the economy, just like a doctor doing regular checkups, inflation data, unemployment rates, growth numbers, industrial production, consumer spending, financial risks. Without this info, no decision would make sense. So what does a central bank actually do? In a nutshell, it's responsible for creating the nation's money, setting interest rates, overseeing the banking system, managing financial crises, controlling inflation, and tracking the economy's health. We don't notice it in day-to-day life, but your mortgage, credit card rates, grocery prices, job opportunities, and business investments are all affected by central bank decisions. It's the invisible hand keeping the economy steady. A bit deeper, how central banks influence your daily life, you might even be surprised. People often don't realize how central banks operate in secret. You don't see their decisions the way you see a new government policy or a change in taxes, but the effects show up everywhere around you. For example, if the Fed raises rates by even 0.25%, the impact spreads far and wide. Your credit card APR goes up, mortgage rates go up, companies borrow less, hiring slows down, people start saving more instead of spending, and prices stop rising as quickly. It's all down to a decision made in a room that most people will never get to see. And the opposite is also true. When the Fed cuts rates, the economy gets a boost. A company that says, "We can't afford a new office right now," might suddenly realize that the loan is cheaper now. Let's go ahead. Families who put off buying a car or a home are now having second thoughts. Businesses are taking risks again, investments are returning. That's why central banks are sometimes called the mood managers of the economy. They have a big impact on confidence, expectations, and spending, but they never actually talk to regular people. Another important role is making sure everything is regulated and stable. The central bank is in charge of deciding how much money banks must keep aside as reserves. This stops banks from lending too much during good times and then going bust during bad times. It's like making sure every athlete stretches before a race, not the most exciting thing, but necessary to avoid injury. Lastly, central banks need to stay independent. If politicians controlled the central bank, they could print money before elections or force rates lower to make themselves more popular. That always ends in inflation, instability, and crisis. Independence keeps the economy safe from short-term decisions. It keeps long-term stability at the heart of its approach. Basically, a central bank's job isn't to make headlines, it's there to make sure your life doesn't get suddenly thrown into financial chaos. If you never notice it working, it's probably doing its job well.